I think a lot of people, understandably, but I think mistakenly, believe that silver squeeze is going to be responsible for the inevitable moonshot that silver will make. And by moonshot, we mean, of course, the collapse of the dollar. It might hasten it a little bit, and obviously the world is better off with a silver squeeze movement than without one. However, silver becoming money again directly, at least for a time, is the inevitability of the end of the dollar system. But I don't think silver squeeze, the movement to acquire physical silver before this happens in a conscious way by a whole group of people, I don't think this necessarily speeds up the process. What it does do is that it wakens more people up so that a greater proportion of people, once the end game does hit, do have resources, and the real monetary system, meaning the gold and silver dispersed amongst the population, is more equitable, you could say. I don't even want to use that word because it's a bad word these days. But the more people that are woken up beforehand, the more people will be able to participate in the rebuilding of the division of labor once the end game hits. Assuming that there is no silver squeeze, that there was no silver squeeze, fewer people would be aware of the inevitabilities of the end game until it happens. And those fewer people would have more wealth as opposed to a greater number of people with slightly less or more evenly distributed. However, what is more advantageous to restoring a division of labor? To have as many people as possible with real resources before the monetary system implodes. You don't want a situation where the real money is piled up among very few sources. The more evenly distributed it is, meaning the more people understand this is what they have to do, the more stackers we can get to join us before the end game hits, the bigger the base upon which the division of labor can be reconstructed. So hopefully we can get the word out this year in 2023 to keep spreading the silver squeeze movement, because that eventually it is these groups of people that are going to rebuild the division of labor once the monetary system implodes. Let's go to the slides. In our first slide here, see SLV holdings hit new lows, and this is a theme that I'm going to show you throughout these slides, a bunch of charts I have lined up here. Now what I want to point out is that as the spot price rises, the holdings in SLV tend to rise. That has been the case throughout its existence pretty much. And we saw here in 2020, right after the world changed, we saw here a rise in the total metal in the trust. This is the SLV holdings, the amount of silver in the actual ETF, supposedly, and that rose as the price of silver rose. And we saw here's the silver squeeze up. Ever since silver squeeze, the holdings in the metal have trended downward. You see a little blip up here in the beginning of 2022, the beginning of last year, with a little rise up in the silver price here. But ever since then, holdings have fallen, and I want to zoom in on this final area here. Okay, so this is since the silver bottom, or very near it, in mid-October of 2022 last year, and we've seen the silver price, the SLV price, and the silver price move up, and in that time, the SLV holdings have continued to trend down. This is the first time on a sustained basis for months on a trend that silver has trended higher for such a long time, but SLV has liquidated shares and liquidated baskets and shrunk its silver holdings. This has never happened for this long of a period of time, and I think it signifies that control is moving over to the physical markets from the paper markets. You can see this also showing up in the junk silver premiums chart. How so? Well, because you see here that the premiums topped out in November at around 48% or so, it looks like. I don't know exactly the number, 47, 48%, and now we are down to 28%. So that is a 20 percentage point fall in premiums from the peak at around 48%. Now what is happening here is that the spot price is obviously rising, which as a percentage, assuming that physical coins stay around the same price, the premiums are going to fall. However, they are not falling as fast as the spot price is rising. If you calculate from this point here, when physical premiums were about 48%, the spot price has risen 27%, whereas the fall in premium is about 20 percentage points. So the price of premiums, physical premiums, have fallen less and the spot price has risen, which means demand is still going into the physical markets even though the premiums are falling. Had premiums fallen at the same pace as the spot price rises, then the demand would be the same. And if premiums fall faster than the spot price rises, then demand for physical is falling relatively to silver. But it's still rising because the premiums are falling less fast than the spot price is rising. And here's what I wanted to focus on. This chart I think is very important. This is gold, and we'll move to silver in a second. You see here that the open interest has been trending down since the March 7th nickel squeeze high. Now we would expect open interest to fall as the spot price falls, but we are seeing now something a little bit different. The spot price is rising and open interest is still trending downward. It has been rising for since around late September, October, November, December, January. So that's 4 months now. That's the longest it's been trending up, and open interest is still trending down. On a long-term view of the gold open interest chart, you can see that on final bull leg moves like this, for example, in 2020, in the August 2020 high, and in the March 2022 high, which is about equal or close to 2100, about 2080, I believe, we see in both instances these sharp moves higher in open interest. So this is a signal that it's the paper traders that are controlling the price here when you have a final bull move up in a bull cycle. So when open interest shoots up like this, that means there's a little bit of a frenzy going on and there's probably going to be a sell-off. But see, we're not seeing that now, and that's why I wanted to zoom out. In the gold chart, at least, we're seeing gold move up strongly and open interest really isn't going anywhere. So that means there's a lot of room left for this bull move to run. In this long-term silver chart, I want to point out two things. I pointed this out towards the beginning when I started doing the silver report, but it's good to remind here that we're in a new year, that the end game monetarily in the silver market is going to look something like this that we saw in 1980. You see here, this is open interest on the bottom here, and open interest was rapidly falling as the final parabolic top beginning in 1979 started to take shape. You see here, just constantly falling open interest. This was a year-long short squeeze from these positions way back in the mid-1970s, and here we see a peak of like 450,000 contracts open in silver. And so compared to that, we're not seeing that yet. So we are not in end game stages right now. What we are seeing now is a rise back up in the silver price and a generally trending down open interest. We saw here it was at 250,000 contracts in 2019, and it's been falling ever since. And this as the price has been trending higher. So right now, interest in silver futures is on the wane while the price is moving up.